Okay, so you want to get into investing. Maybe you've already had brokerage or retirement accounts, but now you want to try something new. You've probably seen this thing called Robinhood. Now you're wondering what's it about and what are the pros and cons and should you give it a shot. That's what today's topic will be. We'll dive into the pros and cons of using Robinhood, and hey, by the end of this video, you'll probably have a solid decision. So first off, Robinhood stood out as a disruptor in the brokerage industry. Its biggest competitive advantage was not charging commissions for stocks, options, and cryptocurrency trading. They were the first platform that brought that mainstream, and people loved the idea of it because actually paying money to trade stocks or buy them can be quite hefty on the pocket. Yes, you can trade stocks, ETFs, options contracts, and cryptocurrency for free. Robinhood allows you to purchase fractional shares with as little as $1. If you enable the dividend reinvestment program or DRIP in your account, Robinhood will automatically reinvest any earned dividends from stocks or ETFs, provided the positions support fractional share trading. However, the edge has been neutralized as most of the brokerage industry joined in eliminating commissions. So we wouldn't say it's that big of a pro, but it definitely is something good. On top of that, Robinhood has developed a strong brand and niche market with young, tech-savvy investors thanks to a clean design and user experience that focuses on the basics. It is extremely easy to set up and use. Thanks to a mobile app with a clean design, Robinhood is an easy choice for investors who primarily use devices to manage their accounts. You can also use the web-based platform, which has a similar look and feel to the app. Both platforms support the same order types and asset classes. Their easy and clean interface can be a huge help to beginners. They're still adding a lot of features to the platform these days. The recently added cash management services and a recurring investment feature in an effort to attract new customers and deepen the financial relationship with existing customers. Robinhood's cash management features will allow you to earn 0.30% APY. You also don't have to pay ATM fees at any of the 75,000 plus ATMs in their network. The recurring investment tool enables you to automatically invest a fixed dollar amount periodically, such as once per month. They also have some good stuff for options trading. An option is a contract that gives its owner the right to buy or sell a certain security at a certain price up until a certain date. Purchasing crypto in Robinhood is also applicable, and they also run the first brokerages to actually allow you to do that, but it's not the same as buying crypto from an exchange. Like we've mentioned previously, Robinhood has been adding more and more features from DRIP to crypto. They've just added so much constant innovation. If you're into all these new features that are available to new investors, then it might be enough of a reason for you to try Robinhood. On top of all that, you could get a free stock by just signing up using someone else's referral code. If you're new to brand investing and you don't know much about stocks, also if you like a clean, simple, and easy-to-use platform that has commission-free trading, then Robinhood might be right up your alley. Maybe you also want to get into options in the future, or you just want to take a look at your stocks on the go with a mobile platform, then it's very justifiable. Now that we've talked about the pros of using Robinhood, let's head on over to the cons that you would want to look out for. Okay, so firstly, Robinhood has been through a lot of controversies. In recent years, Robinhood has faced regulatory fines, public scrutiny, and lawsuits. It has been known to have some outages, especially during the times of extremely high volatility in the market. There was the whole GameStop disaster with them disabling the actual buy button when there was a lot of volatility revolving around it. That took place on January 2021. The app came under fire for its decision to restrict trading during the extreme market volatility surrounding GameStop and other heavily shorted stocks. And while the market conditions led other brokerages to take precautions, Robinhood's restrictions were more expansive. So if you really want to actually have complete control of all your funds and you are doing high volatility trading or day trading, maybe Robinhood may not actually be the best platform for you. In 2020, Robinhood was hit with a $65 million fine by the Securities and Exchange Commission for misleading customers. Throughout the surge of new investors during 2020 and into 2021, Robinhood, along with other brokers, experienced outages and other technical issues that disrupted service. Both the outages and the January 2021 restrictions led to class action lawsuits. Robinhood has an F rating with the Better Business Bureau. The Bureau also says the brokerage has a pattern of complaints that show multiple users were unable to withdraw funds from their investing accounts. Earlier in 2021, Robinhood also settled a wrongful death lawsuit over the death of a 20-year-old user who committed suicide after seeing an incorrect negative balance of $730,000 on the app. All those controversies really took a toll on the platform's reliability and trustworthiness. The trading experience on Robinhood's web and mobile platforms is fast, simple, and streamlined. However, what you see is what you get with Robinhood, as there are no customizations on the web or the mobile platform. You can't set default order sizes, time periods and charts, or anything else. Robinhood's range of offerings is also extremely limited that it only offers stocks, ETFs, options, and cryptocurrency trading. Robinhood doesn't support mutual funds or fixed income products, and you can't trade commodities, forex, or futures. They also have no retirement or tax advantage accounts. Robinhood only offers taxable brokerage accounts, so if investors are looking for tax advantage investing accounts like Roth or traditional IRAs, they must look elsewhere. Plus, they have a lack of educational resources. Educational resources for new investors are limited to a newsletter and some articles on Robinhood's website. In-depth reports are only available with a Robinhood Gold membership for $5 monthly. On top of that, they lack some diversified investing products, meaning they have no mutual funds or bonds, which can make it hard to create a well-rounded portfolio. You've probably weighed out your decision, but don't stay firm on that just yet. Let's first discuss who Robinhood is best for, because you might just fit this category. So, is Robinhood good? Well, it can be interesting to newer investors without a lot of cash with which to invest. With no trading or commission fees, no account minimums or account maintenance fees, it's a cheap way to get one's feet wet with the stock market. However, the app's gamified tactic to investing makes it too calm to trade quickly and frequently. Robinhood users trade 9 times more often than users of low-cost brokerages such as E-Trade, according to a November 2020 study by behavioral finance experts. Other studies have shown passive investing, also known as buying and holding, and it's proven to build more wealth over the long term than making active trading decisions. So Robinhood's ease of trading may actually work against you. Another reason to look elsewhere? Well, Robinhood does not offer Roth IRAs or traditional IRAs. Financial experts love these accounts because they help shield you from taxes while you build wealth. Other discount brokerages allow you to make all the same investments you might make with Robinhood, except with a tax-advantaged retirement account. Robinhood might be a great option for people who would like to invest in cryptocurrency, though it lacks some of the more innovative features you'll get with cryptocurrency exchanges. Financial experts advise investors to limit their crypto holdings to about 5% of their overall portfolio, and to achieve other financial goals first, such as eliminating high-interest debt, building an emergency fund, and investing in a traditional retirement account. So our final verdict: if you're new to investing and have a small balance to start with, Robinhood could be the place to get you accustomed to investing. The mobile-first broker sports a simple app and website providing a seamless on-ramp to investing in stocks and ETFs. Although the user experience cannot be customized, the app and website have all the essentials a new investor would need. The recent controversies with Robinhood may have tarnished its reputation with some of the younger investors it craves, but the company still has commission-free stocks, ETFs, options, and cryptocurrencies, and borderline addictive apps to trade them on. Speaking of investment apps, we have another great video on the top 5 best investment apps to use in 2022. Do check that out if Robinhood is not your cup of tea. You might just find your best option there. However, if you're an active investor or trader, there are much better options on the market, as Robinhood does not support robust charts, screeners, and so on. Although most brokers charge for options contracts, and some still have ticket charges for equity trades, you will have access to research, data, trading tools, customer service, and educational offerings in exchange. Even if you're a new investor only interested in buying and holding stocks, there are other zero-fee brokers with more resources that are worth serious consideration. We hope these pros and cons helped you in formulating a good decision. So what do you say? Will you invest in Robinhood? Why or why not? Let us know in the comments below. Always remember to invest at your own risk. If you like this video, do give it a thumbs up, subscribe, and turn on post notifications. Until then, we'll see you in the next video.